Good day, everyone. Today is 3:47 Eastern Time and the 1st of December, Friday, and we have a disclosure. What we're looking at, Ninjatrader 8, and we are using the swing trading today. You have two options. You can scalp the market, which I advise to use a limited order. With the swing trading, I advise market order. The reason is we like the market order on that auto trade because it does not take too many trades. As an example today, we have the general played guilty, and that caused the market to move very fast. When the market is moving fast, you have a very high slippage going in and out of the market. I mean, if you are on a sim, you're not going to see that. But when you are taking a live trade, the slippage is extremely high in and out of the market, and that can eat up your profit. And a lot of traders are unaware of it when you are going to a live market. Oh, by the way, we are using Ninjatrader, a broker, as a connection. So let me show you what happened earlier today and why we have the advantage to take as little as possible to avoid those high slippage. All of them are on a $500 minimum. Some of them they made 500, some of them they made 2,000, but they're all on $500 minimum. So if the market is moving, we're gonna nail whatever we're gonna nail. If this market not moving, we are stopping within an hour or two. This is the safest way to do it. So let me show you what happened earlier today and why it is very smart not to use an auto trade where it goes in and out of the market on a very speedy market like today. On a normal day maybe it's okay, but on today your profit is gets eased up. You lose all your profit because of the slippage. What we have here is earlier today I recorded. We have 3 minutes on the CL, 3 minutes on the ES, and 3 minutes on the DAX. And you can see once we catch the trend, we are taking a big trades, and we are staying on that trade until that trend is over. Again, until that trade is over, which that can save a lot of money in the slippage and commission. So if this market is moving, we're gonna catch that trend. If there is no trend and the market is not moving, maybe we need to call it off for today. After all those years, I find this is the safest way to approach the future market. And if we look on the CL, we have one trade, two trade, and then if you look on the ES, we have one trade. And if you look at the wicks on that 3 minutes chart, this is, I mean, a little bit mid-sized chart, and you can see there is a lot of pullback, which it is very expensive on a very fast moving market. But this is the idea of that auto trade, not to use too much stop loss, as little as possible, like what I showed you on the previous videos, and stay on that trend. I find it is a very profitable approach to the market. So that's why we advise you on the scalper, because you can scalp the market. We can scalp the market, and we can swing trade the market. And you have to have both. You have to have both. When the market is not moving, then we can use the scalper with a limited order. I don't like slippage. And when the market is moving like today very fast, or if you wanted to swing the market, you can swing the market, start the auto trade at 9:30. The minimum target is 500. You can use $200 as a minimum target. And this is an idea for a guy, even have a smaller account. If this market is moving, we are catching that trend. If this market is not moving, then you need to call it off after an hour or two, because sometimes the CL or the ES is not moving or is not giving any money. So no use to sit down and burn yourself out. And in the same time, it's a little bit less stressful if we start at 9:30 and that auto trade catch a trend. And then you can be, actually it's very enjoyable. And the idea is, if you catch the trend at 9:30, as we showed you yesterday, the YM yesterday made over 2,000 on one trade. Another one, the Nasdaq, made, I don't know, 1,500 on one trade. So also this is a very good approach, that for a guy have a smaller account, that if he catch the trend, is gonna beef up his account pretty well. And if the market not moving, then let's say he have the $200 minimum target today, the auto trade, if the market is moving, and a catch a trend, is not going to stop at 200, is going to keep moving until that trend is over, and then a closed position. That's why you see some of them are on 500, made 500, some of them made 2,000, but they're all on a $500 target. So the idea is, if the guy have a smaller amount of money and he's using one Nasdaq or one Dow Jones, if he can catch the trend 2 times a week, that is slowly he can grow his account slowly. If this market not moving, then he can walk away with 200, or maybe he's not gonna walk away with any money today, but he's not having severe damage to the account. Also, on a very fast moving market like today, all your indicators are off the chart. All your fibs are off. When the market moves fast, all your indicators, all your fibs, it doesn't matter where they come from, there is lagging, the market is moving fast, and is no longer you can rely on them. So let's say if you have 3 contracts on the CL today, and the market start moving fast, and the slippage can go way from $50 to $100 in a slippage on the way in or on the way out, and on 3 contracts, this is a severe damage, and all your profits are gone, because the going in and out of the market is no longer $3 or $5. If you have the slippage, 3 contracts, maybe is costing you that entry around $250 on the way in and out. So this is something you really seriously need to think about it. If this market is moving fast, you cannot afford the slippage. Let me break it down for you in pieces. Normal on any kind of auto trade, it is a trade between 110, 120 to 200. Now, when the market is moving, sometimes you will find a good trade that can go very much higher than that. But here is the problem, that if you are on 3 contracts and the auto trade going in and out, or 4 contracts, and you have a slippage, you're not calculating if you have a bad trade. Let's say that a bad trade was losses $250. Then it's gonna go on top of it, between a slippage and commission, another $250. Now you are in a hole on one trade for $500. And here is the problem, is when a trader is trading on that expensive entry and exit, he don't have the guts, or he don't have the money to last all day long waiting on a breakout, and it might happen, might not. Trading is a very serious matter, and auto trading is more serious, because also you need to be aware how to manage the auto trade, and you have to be aware what is a slippage, what is limited order, and what is a market order. Folks, that's all what we have for today. I wish you a very happy weekend, and I thank you all, and see you another day. Bye for now.